frankly, it's difficult not to let emotions get the best of you as an investor. It really is. Anybody who says it's not probably either has very, very little in the market, so it doesn't make any difference, or they have so much that it really doesn't make any difference. It's everybody in between where the problem comes in, because it does make a difference in their outcome if they let it. In other words, if they make emotional decisions, they get emotional outcomes, which generally don't turn out well. If we think about our own personal relationships, oftentimes it makes a great deal of sense just to take a deep breath, put one's hands on the table, if you will, if you're standing up, and just, so what are we really accomplishing here? And oftentimes, if you do that as an investor, just to take that pause, take time to say, hold it. We've prepared for the certainty of uncertainty. We've prepared for this moment. We understand how this play is going to run. We understand that the outcome is a long, long time from now. And while it may be somewhat difficult or exciting, either in a really great way, so we had a tremendous day in the market, or not, it's about pausing. It's about taking time. It's about really taking in, well, why is what's going on, so that highs become certainly highs, but maybe not the highest it's ever going to be. And lows are not always going to be lows. The market has a tremendous way of over time correcting itself, and previous highs are now lows, and vice versa, unfortunately. But over time, if you take a step back and say, well, what difference is this going to make in my time frame? Chances are that's going to help put things in perspective. And it's that type of conversation that's not uncommon. Why aren't you excited about it, Mike? Well, because we put things in perspective, and we help clients put things in perspective. And we help clients put things in perspective, not only in terms of the market, but in terms of their financial goals, in terms of their values, in terms of what they're trying to accomplish. And those 1 day, 1 week, 3 month, 1 year moves are not that big of a deal. Oftentimes, if the market's down, they're great buying opportunities. If the market's up, they're great opportunities to take some money off the table, perhaps understanding that the market will vary. Oftentimes, it's easy to say we'll focus on what we value. It's easy to say we'll focus on the long term. What's more difficult to do is actually do that. So oftentimes we find ourselves in a position where we say, well, let's pull up reports and analyst reports and reasonable expectations of where they see the economy going, where they see a particular industry sector going. Let's pull up some analysis, both good and bad. So for example, you can look at certain companies today and you say, my goodness, the price earnings ratio is 70. So it's got a 70 PE. And they only like buying things that are a 12 PE, because that's what they're used to buying. And then when you look at this and you say, well, but price earnings over growth, what does that really look like? Well, if there happen to be companies which we're investing in where a PE ratio might be a 70, but the price earnings or the PEG ratio, price earnings over growth, might turn into a much more attractive ratio, as opposed to the 12 PE, which is very traditional, call that a utility, for example, and they only grow at 3% per year. So in 4 years, presumably, that utility will earn that 12, okay, the number 12. Whereas if you've got a 35% growth ratio, you could have that same number in 2. But the question is, how do you move one's mind from saying 12 is good and 70 must be bad? Well, it's price earnings over growth. So why do I point that out? Because that's just one of the mechanisms that we use, depending on how, if you will, in the weeds somebody wants to get, to understand the analysis for why we choose what we choose. That said, we also want to make sure we're never in a portfolio or in a position where we can move from a portfolio where, if the client is not really comfortable, and if the client says, I understand that, but, and so all the logic in the world isn't going to help. So if you say, what am I thinking? They know what they're thinking. They can reiterate what they've just heard. They can see the numbers. The problem is the next question, what are we feeling? And it doesn't matter. They just feel like, let's take some chips off the table and let's go ahead and move into something, and we'll see where that goes from here. And if they miss a couple dollars based on opportunity cost, that's fine, because they've still done very well, okay? Nobody can guarantee tomorrow, but what we can do is assure one that it's about the relationship and it's about understanding, regardless of the analytics and all that stuff aside. You have to be able to understand that the person on the other side of the table from you truly knows you. And we can go through the analytics and then have a laugh and say, yeah, but I'm thinking you're right. I'm not feeling good about it. Let's pull some chips. And doing that, and that doesn't necessarily hurt the overall outcome. You still get to where you're going. You just get there in a little bit more comfortable fashion. If you'd like to learn more, I'd love to have a conversation with you. It is about the relationship. It is about understanding not only the analytics, but also what's going on up here and what helps you sleep. I'd love to have the conversation a little bit longer and a little bit more personal level if you'd like to. Reaching me is very easy. You can see it right there.